Welcome to the Manual and Computerized Accounts Level 5 course. This video covers the Manual Accounts section. The second video in this series covers Computerized Accounts. There are 5 assignments in the Manual and Computerized Accounts course. The first assignment covers a full set of manual accounts. The second assignment is an introduction to Sage 50 and consists mostly of data entry. The third assignment covers processing a full set of accounts in Sage 50. The fourth assignment entails entering the manual accounts done in Assignment 1 into Sage 50. The final assignment is a short theory exam interview where you will be asked questions relating to the concepts you have learned throughout the course. So, let's get started. Firstly, we will look at an overview of typical business transactions and the books used to document them. The examples we will use are focused on product purchases and sales rather than services. Also, the examples will be based on operating on a credit basis. We will give our customers 1 month to pay for each sale, and we will presume our suppliers will give us 1 month to pay for our purchases. So, let's look at the different books used to document our transactions. When we make a sale on credit, instead of taking payment we issue a customer invoice, which is essentially a request for payment. This is documented in the Sales Day Book. After making a sale, goods may in some cases be returned to us due to oversupply, damage, incorrect quantities, etc. If this occurs, we will issue the customer with a credit note, which will have the effect of reducing the amount owed on the corresponding invoice. This is then documented in the Sales Returns Day Book. When we purchase a product on credit, instead of making a payment we will be issued with a supplier invoice. This is documented in the Purchases Day Book. After making a purchase, goods may in some cases be returned by us due to oversupply, damage, incorrect quantities, etc. If this occurs, we will send back the goods and be issued with a supplier credit note, which will have the effect of reducing the amount owed on the corresponding invoice. This is then documented in the Purchases Returns Day Book. At some point the customer will pay what they owe. Sometimes they may go over their allocated 30 days, etc. When we receive a customer payment, we should issue the customer with a receipt. This is then documented in the Cash Book. When our 30 days are up, we will need to pay our supplier. We should receive a supplier receipt as proof of payment. This is then documented in the Checks Journal, which is sometimes known as the Check Payments Book. So, we have seen that the sales go in the Sales Day Books and the purchases go in the Purchases Day Books. And the payments and receipts go in the Checks Journal and the Cash Book. For revenue purposes, the Cash Book and Checks Journal will suffice if the business is not registered for VAT. If our business is registered for VAT, then we need to document the VAT transactions. Therefore we need to have Sales and Purchases books as well as the Cash Book and Checks Journal. It is important to note at this point that the Cash Book records all money in, not just customer payments. Items such as incoming rent, revenue refunds, cash sales, etc. are all recorded in the Cash Book. Likewise, all money out is recorded in the Checks Journal, including items such as rent payment, revenue payments, bank fees, etc. These books are sometimes known as books of first entry, as it is in these books that our figures appear for the first time. While not all businesses will offer credit, For the purpose of this module, most of the transactions are on credit. When customers owe us payment for goods or services that they purchased, they are known as debtors. When we owe suppliers for goods or services that we purchased, the suppliers are known as creditors. In the next section we will look at how to document transactions grouped by customer and by supplier. Presume for a moment that one of our customers, John Ryan, calls us to ask how much he owes us. So far, the only thing we could do is to trawl through the day books to calculate how much is outstanding. We would need to add up all his transactions from the sales book, sales returns book and cash book. We would then need to subtract his total returns from his total sales and then subtract his total payments from that. All of this would need to be done while the customer was waiting, so obviously this is not practical. Instead, we create a debtor's ledger to summarize each customer's transactions in one book. In the example shown we can see that John Ryan bought an item from us on credit at the start of the month for $1,000. We enter this item in the debtor's ledger as shown, making sure the invoice amount appears in the debit column. It is important to remember that the invoice always goes in the debit column of the debtor's ledger. All other items go in the credit column. Going strictly by date order, we find that the next transaction for John Ryan was a credit note. This is entered in the credit column. The balance column has been reduced by the amount of the credit note. Although there are no dates shown in this exercise, keep in mind that each transaction is entered in order of the date it was entered in any of the day books. The next item by date is a payment of $500. Again, this appears in the credit column and reduces the balance by $500. So, the customer bought goods from us worth $1,000. He then returned €200 worth of the goods bought, which reduced the amount he owes to $800. Finally, he sent us a payment of €500, and this reduces the balance to €300. Therefore, the current balance of John Ryan's debtor's ledger is the €300 he still owes us, and at a glance, we can see all the transactions that created this balance. The creditor's ledger works in a similar manner for each of our suppliers. An important difference is that the invoices always go in the credit column of the creditor's ledger, and all other items go in the debit column. So, to learn and practice the topics introduced in the previous slides, we will now work through a very simplified set of accounts. This will allow us to get an overview of a larger set of accounts without getting caught up in too much detail. This exercise will ignore referencing for now, and more advanced topics such as nominal ledgers and trial balance will be left until later in this course. This is one possible layout for a sales book. The net figure is added to the VAT figure to give the total figure. The net figure goes in one of the VAT analysis columns, depending on the VAT rate of the transaction. Let's look at an example of a completed sales book. We will enter the 3 transactions shown into a sales book and total the relevant columns. We calculate the net figure by multiplying the unit price by the quantity. For the first transaction it is 1,000 by 4, which gives us 4,000. This net figure is entered in the 23% VAT analysis column as shown. We multiply the net figure of 4,000 by 23% to give us a VAT figure of 920. We then add the VAT to the net figure to give a total of 4,920 in this case. When we enter the remaining transactions, we can then add the 3 columns. The credit notes are entered in the sales returns book in the exact same manner as the sales book. In this exercise we will return to the sales book and enter the totals from the sales returns book in the returns line. We then subtract the returns from the sales totals, which gives the end totals. So, sales minus sales returns gives us the actual sales and the related VAT. When a customer pays us, we record it in the cash book. In this exercise we have 2 customer payments to enter. The figures are total figures and include the VAT amount due. VAT is not recorded in here as it has already been recorded on the sales and sales returns book. The amount paid is entered in the total column, and because it was a payment from a debtor, the same amount is entered in the debtors column. When the payment is taken to the bank, the total deposited is entered in the lodged column. We then complete the debtors ledger as shown before. Make sure to have the sales book, sales returns book and cash book open before you start the ledger. The information entered here must come from the completed day books and not the original exercise sheets, as the ledger is not a book of first entry. For each individual customer, extract the sales returns and payments from the relevant day books and enter them in date order. The purchases day book has a slightly different layout compared to the sales book. The VAT analysis section has 2 sections, for resale and not for resale. The not for resale section documents goods bought for our own use, such as advertising, cleaning, office furniture and equipment that we will use in the office, etc. The for resale section documents goods bought for the purpose of selling the items to a customer. Another difference is the folio number column. We used our own numbering system in the sales book. The first invoice was number 1, the second was 2, etc. When we get in a supplier invoice, the invoice number will be theirs, and for our purposes, the numbers will be random. For revenue purposes, it is vital that each item is sequential. If there are missing invoice numbers, then there must be missing invoices. To comply with the sequential numbering system, we write our own number on each invoice as it comes to us. The first invoice is number 1, the second is number 2, etc. This number is then entered in the folio number column. The supplier's actual invoice number is entered in the invoice number column on the far left of the page. This is an example of a completed purchases day book for the current exercise. Notice there is no unit price or quantity, just the total net price for each item. The purchases returns book is done in the exact same manner. Note that the folio number starts at 1 again. When we pay a supplier, the payment is documented in the checks payment book. Again, there are no VAT amounts entered here as the related VAT has been documented in the day books. The totals are entered in the total column and also in the creditors column. Finally, we will complete the creditors ledgers, one for each supplier. The example shown is for the supplier Jim White. Make sure to have the completed purchases book, purchases returns book and check payments book open for this exercise. For each individual supplier, extract the purchases returns and supplier payments from the relevant day books and enter them in date order. Remember, the invoices go in the credit column of the creditors ledger and all other items go in the debit column. Pause this video and take some time now to complete the starter set of accounts in the workbook. It is important to complete this exercise as it will give you an excellent frame of reference for the larger exercise.